happy Monday. It is March the 14th, and we're right in the middle of the month, and it's quite an exciting week as per usual. I'm going to share my screen here, and I want to remind you guys that this is a very exciting week. And on Friday, we talked about the fact that you really needed to hedge out because with all of the uncertainty that's happening, but in particular, the economic news that's to come. So we've got PPI coming out on Tuesday. We've got the FOMC meeting on the Fed funds rate, and there's a lot of uncertainty on this. And let's just talk really briefly with PPI. I think in general, that number is going to come out a little bit oddly. And I think even if it comes out really positively, because of what's happening in the world, it's really hard to say that the market will react because, you know, it's just really hard to say how the market will react. And I think it'll become more clear as I talk about these economic things that are happening and what that implies for the world, et cetera. On the FOMC announcement, I wanted to just briefly go over something I went on Friday. I assumed it was kind of easy for folks, but now I'm realizing it really might not be something that people are thinking about. Again, this is what I'm seeing in the yield curve as far as things go. This is from Friday's, this is Thursday's. Fridays is more or less going to be the same, and it's going to sit here until we get some notice. Now, I had not conceptualized how much people were like 7 rate hikes plus he may do 50 basis points instead of 25 basis points. I had not even conceptualized that anyone would think it would be anything other than the classic 25 basis points. But I do want to remind you again what I was talking about on Friday. Definitely need to do a video on this one, that the yield curve has many shapes. Inverted isn't the only one that's problematic. Kinked is also problematic in some ways, as are all these other different shapes, just to mention to you that there are, and each one has its own deal. Each one has its own implications for interpretations of how to think about the market. Each one really does suggest something different for who's going to win and who's going to lose, that sort of thing. But I just want to mention to you that the front end of the curve really does impact this type of debt called factoring. And technically and classically, we haven't really ever had, well, I don't want to say we haven't. It's uncommon that these rate hikes are happening due to supply constraints. Okay, our inflation really has a massively strong supply component, and a lot of those things that we've talked about all along cannot be adjusted by an increase in inflation. But I also want to just mention to you that if you raise rates over and above, you will impact the part of the market that the front part of the curve impacts really is factoring. And factoring is when a company takes its receivables, goes to the bank and says, hey, I need to borrow money because I want to buy more things. I'm pretty sure I can sell them at a higher price. Here's what happened last year as relates to selling them at the higher price. And if the front curve, if they haven't already, if you're a small company and you haven't already taken care of this, right? So we've got 3 months and 6 months really what we're talking about. So we're talking about buying inventory through the spring, through the summer and fall. You know, if you haven't already taken care of this, or if you were on a 3-month cycle and then you get the rate increase, this could be really bad. This could be really bad because all the other input costs are already driving the cost of your goods higher. Now you're actually going to take in a fairly aggressive cost. Or alternatively, banks, when this thing is kinked, are going to find it unprofitable to lend to you because, I mean, in fairness, they're still going to have a credit spread over this, but their borrow rate is going to be a little different than what it's looked like historically. So it's going to, this kinking has a real strange effect on short-term borrowing. It really does. It's not the greatest. Yeah, so I just want to remind people that it's not that, like, inverted is not the only thing that could be problematic to marketplace. And so I am going to continue to do research, and I've mentioned a few where I'm concerned that their inventory build wasn't adequate. Remember, in this last year, a lot of folks had been suggesting that the GDP numbers were really only coming from inventory build. Companies I'm looking at, I'm not seeing it. I'm seeing inventory build still slightly under 2019 levels as far as count goes. It's a little obscured because if they're using different accounting methods, it may actually look like a bigger inventory number on the books, but in fact, because of inflation, that might not actually be more goods on the books. So just realize there's a little bit of a nuance to doing that analysis, but nonetheless, it isn't great. I would say the number one company that still is reporting on March the 17th, it might be worth a lottery ticket. And I'm not going to pretend that this is not a lottery ticket. It is. Whenever you're in the options market, this is not great. If you happen to be in Dollar General and you're playing it for the long term because you just passionately love this company, then I would try to hedge out your risk either by selling calls, because there sure is a lot of volatility in this at 54%, or by just buying puts or put spreads. Here's what the stock was trading at 209. I think it's come in a little bit, but the stock was trading at 209. You know, you could get the 205s at $2.68. You could tighten it up. If you tightened it up, you'd be paying only $1 to hedge out a very small move in the stock. Meaning, if you end up with a very big move, you'd be hedged out and probably make some of that back. You can hit me on the Discord or back channel if that's something that you want to discuss further to understand maybe how to protect an asset that you don't want to let go of, because that is absolutely a reason to use the options market. Now, I also want to just generally talk about, oh, sorry, you know what? We didn't start in the traditional way. I do want to give a little love to FinViz. Oh my goodness. I want to give a love to FinViz and look at this market today. It's quite mixed. It's really an intriguing mix of what's green and what's red. NASDAQ is largely speaking red. People are, for whatever reason, just trying to get that short exposure there. The defensives are green. Energy is red. Okay, and energy, it's interesting. Energy's red. Crude oil is down 6.34%. And it's an interesting reversal. I heard a lot of people talk about the idea that that trade is done or is overheated or what have you. I just want you guys to remember that our trade was not originally based on Ukraine-Russia. It was based on the energy policy, which had taken so much supply out of the market. I'd also just like to remind you guys that it's not Amazon. You can't just call up on Amazon Prime and put more oil back into the marketplace immediately. That is not true. Remember, we're taking almost 30% supply out of Europe, and you still got to cart it over there from the United States. So we're going to get to that in just a little second. But I would mention that we had talked last week that you have options expiration on Friday on the monthlies. So in general, we would anticipate seeing some strange activity. But I want to remind folks that are just not used to looking at the futures markets that WTI, this is the oil price, oil WTI versus Brent and all the other different types that might be traded. That expires on the 22nd, so Tuesday of next week. So you the common thing is to then roll it to the next month's contract. So you may see some strange activity because the quoted price here is simply usually spot. So just realize that some of that trading activity is also playing in for the next 5 days on oil. But oil didn't magically appear overnight. And oil on the back end of the curve, it's still backward dated. And it does take some time to bring on the type of volume that is going to be needed to make up and compensate for such a large producer. Now, I just want to also remind you that this is probably pressuring the markets a bit. The U.S. is going after oligarch money via the hedge funds. And I think to make sure that they have capital, they may just be asset raising by selling different assets off in preparation for just returning capital to shareholders. Or alternatively, they may be having those conversations and redeploying that capital elsewhere. So this is also a big one that is in the marketplace because, you know, some of the firms that the Russian oligarchs owned, such as Conquer Capital, did actually touch a number of different funds. So you just got to let that trickle around as well on a day when there is no earnings coming out and a bunch of economic news. Today is really more like we said on Friday. You want to hedge it out and be prepared for down moves when they happen. But to interpret it in the larger schema is a little bit tough. There's just too much happening. I do want to mention, though, the following, especially as it relates to China. I know that this one's going to be a mixed bag, but I just want to remind you guys a couple of things when we talk about China. Right now, to resolve this war, we are kind of going through and trying to get, you know, we're still trying to work out friends and foes, so to speak, across the world. And one of the things, oh my goodness, I forgot it. Here we go. I just want to remind you that this is the image of OPEC. This is 40% of the world's oil supply, and quite a lot of this, particularly Saudi Arabia, could bring it on probably a little bit faster. It's not, I mean, most of them are still running at capacity. That's what all of the oil companies said when they reported in February. So it would take a bit of effort, and to take some time. But technically, this might you might see capacity. And remember, what we're really interested in right now is no more cold days, extremely cold weather. We had a little bit of cold weather just a couple days ago, but particularly no cold weather in Europe, right? Because we got this oil situation going on, even though they're still not taxing or really embargoing Russian oil in parts of Europe. I think parts of Europe are already. So this is also, in my opinion, a map of countries that doesn't necessarily like the United States of America very much. And that is an unfortunate situation that's going to take some time to work out. So, you know, when we think about oil, we think about geopolitics, we think about speed, we should also keep in mind that there's a lot of talk, but we kind of need to see action. You know, this was from last week, we talked about the fact that this is what Venezuela would like to have done if it's going to start producing oil on our behalf. And that is a very long history that I'm not going to get into in this particular episode. The other thing I would like to, that has gotten us bullish on Mosaic, which we've talked about a lot, is the idea of agricultural land use and where it is versus where the fertilizer is. We know these countries produce a whole lot. But I also wanted to remind you, because I was on a chat room the other day where they were really unaware of where food is produced and what is going on. Okay, and this is what they call the Mercator map. And this is something that if you're an African American person, you would know exactly where I'm going with this. The Mercator map is not drawn to scale. It is actually drawn to a projection of the globe onto a square piece of paper. When we're talking about food and food supply, I want you to just notice where the green areas are here in Africa as well as Latin America and the United States, etc. And now I'm going to show you what those countries would look like if you drew them to scale, to understand why some people might be talking about Africa and other locations that we might be interested in making sure that we shore up relationships with, especially if you're Europe. And that's going to look like this. You see how Russia gets a whole lot smaller and even the United States gets a whole lot smaller, Latin America still stays quite large and Africa still stays quite large. And there's a lot to go on there because, you know, the global price of wheat, which is the commodity price represented by the letter W versus some of the other types of wheat, it's going to still be driven by whoever is producing wheat, putting supply in and taking supply out. Now, I think I might not have put that slide in here. Let me see if I got it. It is still the case that Russia and the Ukraine are some of the global largest producers of wheat. But if we're trying to shore up supplies and watch geopolitics, folks that are talking about Africa aren't insane or crazy or anything like that. Right now, this is as of 2019, so there is some updates to this, and it's still going to be the case that Africa from exportable supply is still going to look a little different. But this is what we're talking about, you know. So I just want to make that clear as well. Now, the last thing I kind of want to mention is even if there's this land mass, arable land, etc., this slide comes from 2014 when Vale was still a part of Mosaic, or sorry, Vale Fertilizantes, which was purchased by Mosaic, was still a part of Vale. This is actually how Vale, as you can recall back in November, when Vale spit out about 1.3-ish billion dollars worth of Mosaic. This is how they ended up with getting those shares, is because Mosaic had actually purchased this fertilizer business from Vale. And when it comes to actually producing grain, you'll notice Africa's not on here because at the time, 2014, the purchase was done in 2016. It wouldn't have been relevant because of what was happening in Africa at that time. But you'll see that the US and Brazil are really the two bigger breadbaskets that can kind of take up global growth and demand for grains. And this is already being talked about in 2014, so it's not new news in any way, shape, or form. And you can see the countries that have potentially issues. The three things that matter, arable land, climate, and water availability, have not changed since that period of time. In fact, I chose this illustration, but I've heard this being discussed since 1998 when I was a little baby political scientist, doing my degree in undergraduate. So this hasn't changed dramatically, although some of the data has changed in how they take it and poll it. But I just want you to understand, this is part of the reason we have mentioned a few times that we are trying to get, in small ways, exposure to Brazil. This is the MSCI Brazil index. You can kind of see how it falls out with materials. Financials, you know, I mean, it's probably fine because they probably are going to stay out of the fray. But energy, consumer staples, which is essentially that all that stuff. This is what it is, and so the MSCI Brazil index is heavy on a lot of these commodities, and it might be a slightly less volatile way to get exposure to the inflation that we're seeing. So I would just mention this. There's a few different ways that you can purchase it, but in such a volatile week, if you would I would almost just as soon buy the index and just put it on the screen and see if there are days when it just gets clobbered, because it should not. It's largely speaking going to stay out of the fray. Now, I want you to remember this map here, okay? And Russia, really, we know what exports, we've talked about it a lot. But I also want you to understand that here's what Latin America looks like, right? And Brazil consumes as much as it makes. It may be a little bit of a net exporter at this point, and here's the rest of Latin America. But it is a huge exporter of food, as I'll try to find a better slide for it, but it's a huge exporter of food. It is definitely a breadbasket to many countries. And we can kind of see the exports. I just want to show you, here's export of crude oil, but you know, if you map that with refined, you still end up being a net exporter, but it's a little bit, you know. And then you got huge amounts of grain, right? And then you got your meat complex over here, and then you got the rest of your grains down here, soy meal, etc. Okay, why am I saying this? I'm saying this because one of the things that has bothered me, even though I have talked about want to be a little bit net short China right now, is because there is a lot of antagonism that's happening in China. And then additionally today we have another COVID outbreak that is basically closing down the port of Shenzhen. Now some people have said that, oh, you know, they have it under control, they've done a lot in the way of technology to improve, and that's probably true because it is China and they have been thinking about certain types of things for a while. But it's not great for the supply chain. And so as we look at this and we realize that China, a lot of folks, the march has been increasingly aggressive as people try to push China over into the side of forcing them to pick a side, right? And I don't love it. Some folks have asked me, hey, what about Chinese, if we attack them financially, how do you think about it? Now Russia, that's one thing. With China, they have always been very careful about the ability of other economies to impact them. And yes, they are a global economy, but they happen to be quite a big exporter of goods everywhere, okay? And I'm gonna come back to that in just a second. But it also turns out that all of the ADR, so ordinaries might be okay. Even the Hong Kong stock market might be okay in some ways. But if you're in the ADRs, I really, really want to just reiterate, hedge yourself out. Buy puts if you really feel passionately that your name is the one that you want to hold for a long time. And I'm just going to take the definition straight out at this point because I've said it. I know that sometimes it's hard to catch every single thing I'm saying, but variable interest entities is how all of them are structured. And that refers to a legal business structure where the investor has controlling interest despite not having a majority of voting rights. Okay, what does that mean? That means that, you know, the company can't be sued in any kind of way. And, you know, like it just means that these companies, they will lose, probably in the future, people will be feel a little bit raw about investing in them. But as far as the capital they received, the capital they received is the capital they received. So if China is really going to get aggressive, if the economic sanction war moves from Russia to China, it's not great. Additionally, I just want to, I'm not loving this because it really does separate and create angst across the world. Unlike other countries, this is the U.S. imports 2.38 trillion, we export 1.5 trillion. It's actually the exact reverse. So China imports 1.58 trillion and they export 2.57 trillion to the world. And whereas Russia is a very, very small part of a lot of people's imports and export complex, that's just not the case. So picking friends, Russia versus the US is probably easy for most countries, but picking friends, China versus the US, even though philosophies may go one way, it may not be as easy to unwrap your economy from China. Here again is Brazil, right? Who's going to be a breadbasket potential frenemy, so to speak, or friend, really, because, you know, I think our relations with Brazil, you know, aren't so bad. Versus other countries, let's call it. But here's the imports of China, and here is the exports to China. So versus the United States. So if this keeps polarizing the way it does, I don't like the state of affairs globally. The volatility absolutely should be higher right now, and it is quite high, so I'm not going to try to make a call that it should continue to be higher, what have you. But I just want you guys to really have that background information as you're listening to the drum beats and why they might be scaring me in particular quite a bit. Again, Belarus also is small. Ukraine is small, but we are talking about, which sometimes goes missed, a big breadbasket for Europe. So it's always, the other thing that I would mention that goes without saying is the VGK, which has been doing quite well today. It won't seem to cross 60, but this one is probably a short. I mean, it's up 2% today. Let it go, because you do have, this one does absolutely expire on the monthlies, but I would be very careful to any kind of portfolio allocation you have to Europe right now. I would use them more, I would be better hedged on them, because really they just don't have, certain things. They just don't, you know, there is some fertilizer that is made, but it's really more, you've got some potassium that's made in Germany. I don't know that it's enough to support the entirety of what is needed for continental Europe. They're definitely going to have a reduction in wheat, because they would most likely be the location for the export of wheat from the Ukraine versus American wheat that's got to come across the sea, or Brazilian wheat. And then on top of it, the oil, obviously, like you've got, my understanding from today, some numbers I was looking at today, although they should probably be double checked because sometimes these news items come off a little strangely, is that Italy is almost 100% on Russian oil, and so on and so forth. Different countries, different amounts depending on where they sit along the coast. It's not looking good for Europe, even in the case of a win, because, you know, even a win would just be everybody separates out. A win is not somehow Europe magically takes over Russia and gets a bunch of oil from them and fertilizer. Additionally, if we keep getting very, very aggressive with Brazil and China, then the writing is on the walls. You know, it's hard to get one composite picture. So I just, again, use this one, which is global inflation. There's mysteriously a certain amount of green that is on the board here. And I've mentioned before why I feel that is. Maybe there's another reason that I'm not thinking about, but these are the inflation rate estimates. We weren't able to get the Chinese goods in this last few quarters, but Europe certainly was. So, you know, I'm not loving how things are playing out for Europe on a global macro basis. It's just something to consider. And with that, I'll go ahead and pause, take questions. Hey guys, how's everybody doing? Oh, okay, cool. Any questions?
Hi, May. I have a question. Yeah, about Brazil. Do you
Yeah.
think this what has happened? I mean, are they? I mean, they could turn into a really big exporter. I mean, they're closer to us. They're closer to Africa. And do you see that happening? Are they stable enough for that to happen?
Okay, geopolitics of Brazil is always difficult, but I would say that there was a reason that part of the, oh shoot, you know, I really shouldn't have removed this slide, so I got to add that slide back in. But you'll notice that China has absolutely been building a road in their Belt and Road policy over to Brazil. It's actually something that was very controversial even last year, because, and the environmentalists were very up in arms about it because of the implications of how they were building it. Here, let me show you this map. This whole portion of trying to get this built from China, this blue line over here, was to cut through the rainforest over to Brazil, and it was really ticking off the environmentalists in a big way. But that was what all of that was about. So yeah, Brazil has absolutely ambitions. As you can see, that Vale is a big company, and it does have a certain level of influence. Now, I don't know everything about that, so I'm not going to try to go into the politics too much on this episode without reviewing my own personal notes on it from that period of time. But Vale does have a fair amount of influence, and even if it's not Vale, I think a lot of the mineral folks and other folks that are doing, that road isn't just for food, okay? That road is for other things that Brazil does, metals and mining wise as well, because they also produce a fair amount of a number of resources that are used in batteries. Um, but but you know, their global ambition was definitely to use these beautiful resources for bringing themselves up one way or the other. Now, the unfortunate other side of that, and I think that's where you got to be really careful on the politics, is that they also are oftentimes thought of as the lungs of the world because of that beautiful rainforest and how many plants are on a square acre, or hectare, I guess is the way that they usually do that measurement. But it's definitely something to consider. And that's the thing that is really, really potentially negative in my mind. And I had mentioned it for the continent of Africa. But the removal of Russian supply of this stuff, and also the impact to the two different markets, both the ag complex as well as the energy complex, historically, the way that the world, let me say it that way, has gone into both Africa and Latin America has not been great. I mean, the manner in which they do it, both for the people as well as for the environment. If that is where we end up heading, I pray very much so that we don't do it in these ways that we have done it historically.
Cool,
I don't know if that
thanks.
made
I
sense.
just,
I hope I said that in a way that was politically correct and not necessarily.
I don't think anybody wants to trade with Russia anymore unless they have to.
I know. I mean, I think some will have to though, because it's this oil price is quite high, and certain countries definitely have certain ambitions. So I would be. I mean, like, I don't think anybody's confused that China will take the natural resources from Russia. They kind of need them. They got a really big population, and it would absolutely help them manage any kind of inflation.
Food, soybeans, wheat, whatever Brazil grows.
I'm sorry, say that again?
Whatever Brazil grows, like I know they grow soybeans. I don't know what they do on wheat.
Oh, it's everything. It's the whole ag complex. It is literally the whole ag complex that they grow. They are quite. I mean, yes, definitely heavy soy, wheat, corn, crush, et cetera, all that stuff. Every single thing in the commodities complex, and the composites of them. Taking corn and crushing it up, whatever it is, corn to make the meal, and soy, et cetera. The whole complex is gonna, and then coffee is. There's not one thing that like that whole. Yes. You know what I mean?
You also mentioned, you said battery. They mine like nickel or something, other stuff.
Oh yeah, 100%. Oh yes. You know what? Let me do a more thorough chart of different types of minerals and materials that are coming out of Brazil.
Major change in the way the world works.
Yeah, I mean, some of that though, and this is where I really do want to make sure that I double check, is how much proven reserves are there versus they speculate that it's there, that sort of thing. There aren't a big, like, let me take a look, because really there's a couple of mining companies that would have those slides that are out of Brazil, but I've been out of touch with what's going on specifically there, other than to know that in fact that is the thing that happens. So let me just review some notes there from, way back from me, but.
Cool, thanks. So you think the market overall today is down because of these Russian investments in hedge funds?
I think it's because it's lack of news flow. You got way too much uncertainty. So if you're a fund manager, it's a little scary to get in there,
Right.
I think that this market has been so bizarre, and it's been such a strange thing. You got options. You know what I mean? If you're a brave soul, you might come in and buy one or two things that you've been dying to buy and that you've already worked on. But broadly buying the market today, maybe towards the end of the day, there might be some brave young souls. But I think when I was listening this weekend to different folks dispute various parts, the level and intensity of disagreement was much higher than I was expecting. I was really not expecting even in every single market. So in the commodities market, well, they're mostly bullish, but clearly parts of commodities is trading down today. Strange. And I think that might actually have more to do with the roll than anything else. And also, okay, so like there are a lot of long-term bulls energy for all the reasons that we've talked about. For whatever reason, though, almost all weekend, I don't even want to call it retail investors. I would call it non-commodity specialist investors were saying that they wanted to take some weight out of the trade, because it had run up so much. They just want to lighten on it. And that's surprising to me, but it's a normal behavior in this marketplace that has been so volatile, right? So that's that leg, even though literally nothing has changed as relates to the fundamentals there. I think that one of the bigger, what's that?
The China COVID lockdown would hurt demand, right? For oil.
I mean, it could. It could. Okay, that's a fair point. I won't say that nothing has changed. You're right. At the same time, I think Europe and its issues, let's call it, with Russia, aren't insignificant. You know what I mean? So they're still going to have to get that oil and gas somewhere. And if they've just decided not to get it from Europe, that kind of is what it is.
Oh, I agree. Yeah, I'm a long-term bull in oil. Yeah. I'm just saying today.
Yeah. Right. Yeah, for today, yeah. So yeah, absolutely. The China news is probably creating volatility in it. The fact that the WTI rolls on the 22nd is probably creating volatility on it. And then I think some people are worried that if there's movement in the positive direction on Ukraine, Russia, that would just snap those stocks so aggressively that it will be painful for equity investors on a daily mark. I don't think they're necessarily arguing that there's a long-term bear case in energy at this particular point in history. You know what I mean? You really do need nuclear to come back on in some places. You need a lot more windmills to be built, but just the cement and all that other stuff that you'd have to create to build those windmills is going to require a lot of energy. So building them right here with oil prices as high they are is a little strange. But so I just think that market by market, there's such oddities, let's call them, that it's very hard to use any judgment for today. In general, I would be hedging, taking profits where you can if you're a shorter term person, and waiting to see what happens on the FOMC meeting. If he raises 25 basis points, that would be okay to me. If he raises a lot more than that, I would be worried about the front end of the yield curve because we would really need it to lift up pretty aggressively so as not to crush the supply chain a bit more due to the impact of such an increase on the factoring market, on debt factoring. Sorry, I don't think you call it the factoring market. I apologize.
Back to the windmill. The windmills use a lot of copper.
Yeah, they do. They do. That's correct. I mean, you just can't build this stuff. And copper is very energy intensive to mine. So yes.
Right.
Yeah. That's why we like Freeport-McMoRan, is because they are the low cost producer of that copper globally, because they get their oil from Indonesia. I think there's some kind of subsidy happening in there to help them out. But they talked about that on their earnings call. There is copper in the United States, and they certainly have mines here. They also have mines in Peru, but and in Mexico, if I'm fair, I think there's still some remaining there as well. Any other questions? I know we're...
Well, I think, I want to make out it's a stock pickers market, obviously, and you were in.
It really is. Yeah.
But you had puts, same as a short position in a number of stocks. So that's important to mention.
Yeah. I mean, if you have existing positions.
Long oil, long fertilizer, and short everything else.
Yeah, I know. It's really weird, right? It's not, I'm not looking for war to help my portfolio, so that really sucks. I'm not going to lie. I don't love that the world has turned into this mess. I'm thankful that I was positioned for it. I would also mention the other thing, Clorox, and I don't know if that was clear, again, she's really going to have inventory issues in this rising price environment. So there's that. I'm also starting to do a little bit more work on Kellogg, because although Although, and I want to just, the wheat prices have been a little bit dramatic. It is still something that, to be watched. But I do think that because of the union issues last year, even though their inventory number is showing a little bit better year over year, I'm not sure how the accounting works out on it, such that that's actually a raw inventory number that's going to allow them to get pricing over and beyond, such that they don't have a little bit of a squeeze. So I do think that no matter what, even going in generally into the next quarter, we are going to have a little bit of a difficulty as relates to commodity prices. So this last quarter definitely thematically was a stock pickers market. Next quarter, it's going to be even tougher. Any other questions or any thoughts? All right, we might have to. Okay, I think with that, Richard, if you got any, I am going to go ahead and end the room for today.